Okay, business decisions. Can we reduce this? Yeah, there we go. Business decisions. We can categorize business decisions in a number of different ways. Here's one way. Strategic. Okay, strategic decision. We talk about strategic decisions. We're talking about overall, long-term, major decisions. Okay? These decisions, such as what industry to be in, maybe should we go global. These are decisions that are made by executives in consultation with the boards of advisors and the board of directors. Management decisions. Okay, these are general decisions made by the firm. Marketing decisions. Decisions about which products or services are developed, priced, distributed, promoted to customers. We're certainly going to spend a lot of time talking about marketing in this course. Production. Means by which products and services are made. When we talk about business models, this issue of production is one that will return. Financial decisions. How does the firm obtain or use funds for their business operations? Now, clearly, these are important decisions. I mean, the financing decisions are one that require significant time and effort by management. In fact, these financial decisions, at least the raising of capital, often can distract managers so much so that they don't have time for their management decisions, marketing decisions, production decisions, and strategic decisions. And that has a detrimental and significant impact on the development of their firm, whether they actually get the money or not. Here are a couple of common decisions. Strategic decisions. Okay, again, getting a little more detail. Deal with harmonizing organizational resources, capabilities with the threats and opportunities. Okay, this is a kind of an academic way of saying it's about how you position your business. Okay, how do you position your business in the environment that includes opportunities and that includes threats? And this idea of harmonizing resources, that you need to have the right resources in order for you to combat the threats and the opportunities. As I said before, these big decisions, these major kind of life decisions of the company or organization, tend to be complex in nature. In large part, remember we talked about before, the environment and the political and the governmental and the social and the economic and all of these sorts of environmental factors have an impact on decisions that businesses make, especially when we're looking at long term, 5 years, 10 years down the road. That just makes strategic decisions that much more complex. And as I said before, strategic decisions are made at the top of the organization, okay, with the executives and the board of directors. Management decisions, as we spoke about before. Okay, what sort of equipment is needed? How many employees should be hired? These tend to be the day-to-day decisions that help run the business. Marketing decisions. What price should be charged? Okay, how do we modify, alter, or change the product to become more appealing to customers? How do we promote the product? Public relations, advertising, coupons. Financial decisions. Should financial support come from the sale of stock or borrowing money or some combination? Do we go to creditors or do we go to investors? If we borrow money, should it be short-term, long-term? Short-term rates, interest rates are different than long-term interest rates. How does short-term borrowing affect or impact the management decisions that we have to make, the pricing decisions that we have to make? And how does our source of funds impact the strategic decisions that we have to make as well? Should we, as a firm, invest in a new project? Should we venture? Now, this decision, of course, is not just a financial decision. It's a strategic decision. It might be a marketing decision. It might also be a general management decision as well. Key decisions include product. What type of product should be produced? Production. How should that product be produced? Promotion. How should the product be promoted? And how should the company obtain financing to produce the product? Excuse me. What's the source? What sort of informational resources help us or hinder us in making the correct decisions? Accounting. Accounting information is crucial to helping managers make decisions in the business. No question about it. So and we'll talk about, but we need to know how to understand accounting information. This does not mean that we need to be accountants, but it does mean that we need to understand how to read accounting statements, at least some of the basic ones. We need to be able to know enough to ask the right questions to the people who are expert in this area. Information systems, IT systems. As we know, IT, it's an information world. And we need to have the right information in order for us to make the right decisions. What sort of information do we need to make the right decisions? Okay, so it's not just getting the information, it's trying to decide what sort of information is key in helping us reach our business objectives. And all of these business decisions together interact and affect the performance of the business and the value of the business. How to finance the business, how to market and pick the price of the product, what products to produce, how to produce them. All of these things have an impact on the firm. If we change one aspect, it follows through the chain and affects the value of the firm. So we don't make business decisions in isolation. They all are interrelated, interlocked, and interconnected. Here's another example on how a business decision affects the firm's earnings. Management and marketing decisions have an impact on demand for product, which has an impact on revenue. Production decisions, marketing decisions, and finance decisions have direct impact on the production expenses, marketing expenses, and the interest expenses we may have, which leads directly to our overall expenses. And as we talked about before, expenses minus revenue gives us profits. Okay? Might not be net profit, but it's certainly profit. And finally here, the technology has an impact on our business decisions. And as we defined technology before, we defined it broadly. Knowledge or tools used to produce products or services. And we know today that information technology is key. As we just talked about, it's important for us to understand what sort of information we need. Okay, but also don't get hung up on the technology aspect. Technology is great. IT is great. I mean, we're using this system here to record this lecture and provide it to you, whether it be on your phone, on your tablet, or on your laptop, and you can be anywhere in the world. So IT, information technology, especially information high technology, is really cool. But it's not really the important thing. The important thing is the information that we get and the ability that we can make decisions at a better rate. As you see, it's huge. It represents a significant portion of the economic growth of not just the United States and Europe, but the rest of the world as well. If we use information technology correctly, it can help us reduce the cost of producing products, but perhaps more importantly, it can increase the value we create and give to customers. If we increase the value that we give to customers, that means what? It means we can charge a higher price. It means they're willing to pay a higher price, and that means we have higher margins, higher profit margins, and that's what we're looking for. Okay, that's what we're looking for. I don't need to tell you the importance of e-business and e-commerce as we go along here. So quickly, let's just recap what we talked about in this lecture. One, successful businesses don't require a great deal of invention. Not really about invention per se. As we talked about before, we know it's about innovation. And innovation is the commercialization and widespread use of the invention. Okay, if we can make someone's life more convenient, okay, if we can increase the value to customers, we won't have problems making sales. If we can demonstrate in a clear way that our product or service increases the value of the customer, they'll pay. Some business ideas will fail. In fact, most business ideas will fail. Okay, whether they are startup decisions or business decisions inside the organization. Although we could say business decisions within inside the organization fail at a much lower rate than businesses related to new venture creation. But also, I don't want you to. You might hear these stupid statistics about 9 out of 10 businesses fail and blah blah blah. That actually is not true. Yes, businesses fail. Other businesses don't grow as much as people want, and they sell, they merge, they decide to stop producing the business. But most businesses, limp along. Okay, but I don't want you to produce a business that limps along. I want you to produce a business that rockets to the sky, creates enormous value for you and your customers. And there's great risk in that, and some of those businesses fail at higher rates. The question is, what can we learn from that failure? What can we learn that we can then use in our next startup? There's power in learning from failure. Okay, good. That's the end of this lecture, and I'll catch you on the next one.